Here we are at the end of January, and what does the market want now? Well, it had a good month, so it's happy. It must want what we had in the first month of the year, which euphemistically, I might say that we had a month of fairly mild, calm politics and military action throughout the world, and the companies participated with better than expected earnings, and the economics releases were mixed but slightly better than expected. So the market gained 5% for the month. I'm throwing in Friday there. It was up 4+% going into Friday, and then another percent on Friday to give us 5% through the first day of February. The news last week was durable goods was great, and pending home sales were terrible. But they sort of balanced out, and as the week went on, we had more of that, with Michigan sentiment being good, consumer confidence being not so good, personal income being great, personal spending being not so good. Chicago PMI and Case-Shiller were both very good. Construction spending was excellent to balance out the pending home sales, and initial jobless claims were a little worse than expected. So the net of all that was still the market was happy to go on, and on pretty good volume, had a good week. Mid cap and small caps dominated, as they have been for some time. And from a sector viewpoint, the week itself was strange, but the month, if we look at the month of January, healthcare was up over 9%, as we had sort of projected, and industrials and financials and energy were right close behind in the 8% plus for the month. Not a bad month to get started with the year. Calm before the storm, maybe. We took a look. We decided, we hit a 5-year high on Friday afternoon for the S&P 500. So that's a good time to take a look at values. How are they doing? And our Sabrient 1,000 GARP stocks, it's sort of an average. It's not extended PEs. It's not cheap PEs. The forward-looking projections are sort of average-ish. And so there's nothing to get too worried about from a valuation viewpoint by itself. Let's see, we have 4 stocks for you today. There's United Therapeutics, one of the healthcare companies that, pardon me using my glasses, but it's trading at less than 10 times earnings, less than 9 times forward earnings, upward analyst projection, 63% EPS growth for the current quarter. It's treated us very well in the past year. We think UTHR is a good stock to be holding. Western Refining, up 100%. You say, why? Well, the values are still only modestly above where they were a year ago, and they continue to roll along. They're trading at 27 times current earnings, but only 8 times forward earnings. So with the market looking ahead, we can expect more growth from Western Refining. Texas Capital Bank shares gives us a financial to add to our group, trading at only 13.7 times current earnings, 11 times forward earnings, which is really good in that sector, and very strong upward analyst revisions. So we're going to add to that a controversial stock for you. Get ready for this. This is Smith & Wesson. Well, they don't make hardly any assault weapons, so that's the good part. The stock's down 30%. That's the bad part if you were a Smith & Wesson shareholder. But it's a good time to buy into Smith & Wesson, unless you believe they're going to outlaw all guns. If you believe that, then I wouldn't be buying this stock. But otherwise, they're trading at forward time 8.8 times forward earnings, 214 projected growth for the current quarter, 153% for the whole year, 30% for the next 5 years. So buying them at this kind of valuation seems like a good thing regardless of your attitude about violence. But anyway, our controversial stock of the day is Smith & Wesson. So that's what the market wants, is more of the same, and we'll see whether that's what we get or not.